If you ignore the current market structure, you are walking directly into what could become the single largest liquidation event of the year. You see, while every fundamental signal is screaming that the market should go higher, the real story is a hidden leverage flip that has set a massive trap for bulls. By the end of this explainer, you'll know exactly how to position yourself to ride the bullish trend without getting caught in this multi-billion-dollar wipeout. Okay, let's just start with the number that should have everyone's attention. $5.3 billion. That is the colossal amount of leveraged long positions that get absolutely wiped out if Bitcoin's price just dips back to the recent lows around 84,000. This isn't some small risk we're talking about. It's a giant shimmering pool of liquidity that you can bet market makers are staring at right now. In this slide right here, this shows you the core problem perfectly. Look at this. For Bitcoin to rally all the way to $100,000, it would only liquidate about $2.25 billion in shorts, but a drop back to the lows? That takes out over double that amount on the long side. This is what we call the leverage flip. The danger has completely shifted. So while everyone feels bullish, the actual financial structure of the market is incredibly fragile and weak to a big downward move. So why is everybody so bullish in the first place, right? I mean, there's a good reason for it. Let's break down these powerful macro tailwinds, because on the surface, the case for higher prices looks incredibly strong. You know, what's really fascinating right now is this weird bad news is good news environment. Take the latest ADP private payrolls report. It was a huge miss, showed a drop in jobs. Normally, that's bad. But this weak data puts a ton of pressure on the Federal Reserve to cut interest rates. And as we all know, lower rates and cheaper money are like rocket fuel for risk assets like Bitcoin. Even the little AI scare with Microsoft sales is being brushed off as just a temporary hiccup, not a real threat to the trend. And then you throw a little politics into the mix. There's a rumor floating around that Donald Trump has hinted Kevin Hassett could be his pick for the next Fed chair. Now, why does that matter to us? Well, Hassett is known as a policy dove, which means he's all for lower interest rates to get the economy going. Oh, and here's the kicker. He's a former advisor to Coinbase, a crypto-friendly dove leading the Fed. Yeah, that would be a massive, massive tailwind. And look, it's not just speculation. We're seeing big players putting their money where their mouth is. The crypto mining giant BitMain was just spotted buying $91 million worth of Ethereum. That's not just a casual trade. That's a huge bet from a major industry player. It signals some serious institutional confidence in where this market is headed. So the macro picture looks great. Now, let's shift gears and look at the chart itself, because the price action is telling a pretty positive story too. So here's the key technical detail. Bitcoin has officially broken its recent bearish pattern. You can see it right here. It set a higher high up around 93,800 right after making a higher low at 84,000. I mean, this is classic bullish market structure 101. It's signaling that the path of least resistance is, well, up. And that recent pump? It had some serious power behind it. This wasn't some weak, flimsy move. It liquidated around $270 million in short positions. It basically cleared out the bears and showed there was real strength behind the market's push upwards. Okay, so let's recap. We have a bullish macro environment, bullish politics, bullish whales, a bullish chart. Everything is pointing up. So with all this good news piled high, what's that hidden risk we talked about at the very beginning? This is where the whole story takes a sharp turn. We have to talk about this dangerous leverage flip, because right now, the very structure of the market is at war with its own fundamentals. So let's be super clear on what a leverage flip actually is. Think of it as a tipping point. It's the moment when the amount of money betting on the price to go up using leverage becomes way, way bigger than the money betting on it to go down. This creates a massive, juicy target for a move to the downside. And this chart, this visualizes just how nuts the situation is. Look at that bar representing the 5.3 billion in longs at risk. It absolutely dwarfs the shorts. The market is dangerously lopsided, and that creates a huge structural weakness that a single big move down could exploit with, frankly, devastating results. So, how do you play this? How do you stay aligned with all those bullish fundamentals without getting steamrolled by the liquidation trap? Let's get right into the pro strategy for this exact kind of market. The strategy here is actually a pretty simple two-step process. First things first, stay bullish. The fundamentals, the charts, they all support higher prices in the long run. You don't want to fight the main trend. But, and this is the absolute key to surviving right now, you have to do step two. you must cut your leverage way back. This means trading spot, using super low leverage, or using options to protect your capital from that violent, sudden flush down that the market structure is practically screaming is possible. So there you have it, the breakdown of this critical crypto contradiction. To stay ahead of market drops just like this one, make sure you're subscribed to us here at Crypto Global News. Like this explainer if you found it helpful, and definitely hit that bell icon so you never miss an update that could save your portfolio. So we'll leave you with this one question. You have a war going on between these incredibly bullish fundamentals and this incredibly risky market structure. Which one is going to break first? The answer to that is going to define the next major move in this market.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.